Hi, this is Sheldon here from the Currency Advisory Desk. Well, the RBI cut the cash reserve ratio, the CRR that is, yesterday by 25 basis points from 4.75% to 4.50%, thereby infusing liquidity in the banking system of around 17,000 crores. We would be surprised if the RBI had cut interest rates also along with the CRR, because as the current round of QE which is done by Fed and the groundbreaking reforms which have been introduced by our government would definitely drive up the prices of commodities, and this in turn would drive up inflation in our country. So this is a well played move by RBI of only cutting the CRR, that is. Now, to analyze the CRR cut a little bit further, well, basically what's going to happen is corporates will get access to cheaper funds as banks would be reducing their lending rates, and this should boost flow of capital, and this in turn would increase the easy access to working capital for the firms. So definitely we'll see a boost up in the P&Ls, which will be reported probably not immediately but maybe some months down the line for the next quarter or so. We'll see that the capital account that of every corporate, the working capital will definitely be increased, and this in turn will translate into better performance by the corporates. Now, the US dollar index is trading at 79.14, which is up by 0.09%. Now, we expect a range bound movement in the dollar rupee pair between 54.08 to 54.60. Now, we are bearish on the euro and pound also versus the dollar, that is in international terms. Now, primarily the reason for being bearish is that the extraordinary run up in both these currencies for the past few trading sessions, it's been really rapid. Now, everything that goes up has to come down, as we know, and this rule has been tested many times, especially in the currency markets. Now, with the unidirectional movement of both these currencies, the euro and the pound, we believe that it's time for some consolidation from these levels, and hence we have a bearish outlook on both these currencies versus the dollar internationally, and even domestically. If we look at both these currencies, we expect both of them to probably decrease in value over the coming few trading sessions. Now, from a fundamental viewpoint also, there isn't any macroeconomical factor that has changed in the European Union. If we look at all the fundamental data that's coming out, we are still at the same level of unemployment, surging bond yields, and rising level of no confidence in the Eurozone. Hence, there's nothing that is fundamentally changed or structurally changed in the Eurozone which will probably give a boost to their currencies or which justifies their currencies at such a high level. As far as the yen is concerned, there is a lot of market moving news which will be released by Bank of Japan tomorrow. However, as we know that our markets are closed tomorrow on the account of Ganesh Chaturthi, hence we do not expect any of that movement to probably be reflected in our trading. Now, we expect some stimulus from Bank of Japan tomorrow, and we will see the yen internationally getting weaker against the US dollar. We've seen that Draghi, whatever plans that he has come out with, they were more focused on beating around the bush rather than getting some concrete action together and targeting ground zero and probably improving the economy as such in the entire Eurozone. So as far as the pound and the euro is concerned, we are bearish on that, and for the yen, since tomorrow will be a major market moving day, there isn't anything much that we can expect due to the closure of our markets. Looking at the technical levels for today, for the dollar, we have an important support at around 53.90 and a resistance at around 54.76 on the upside. For the euro and pound, one can go ahead and short sell for the euro at 70.40 and for the pound at around 87.70 respectively. For the yen, we see that there is a strong support at around 68.50, and on the upward direction we see that there is a resistance at around 70.03. These both are very crucial levels as far as the yen rupee pair is concerned. Well, that's it for today. Thank you.